Well, we just completed a £350 million share buyback last year. We have a very, very healthy balance sheet, and in short, we want to maintain optionality. We want to see how the beginning of this year plays out and give ourselves that optionality to see whether or not, how best to use the strength of our balance sheet going forward.
What does it mean in practice? Are you saying you might want to use the funds for an acquisition?
Well, we made 3 acquisitions last year in Credley and Mondley, and more recently in our Pearson business with PDRI, and so we also want to be able to sort of digest and integrate those acquisitions into the broader group. We have nothing specific that we're looking at, but with what's happening with the economy, what's happening with interest rates, particularly as you look at in the edtech market and some of those valuations, there's always going to be opportunities that we could look at, or we could decide, the board could decide that we commence another share buyback.
Yeah, do you know what? I can't even believe in the 21st century, we're still in the 21st, that you're having to defend not spending your money. And this is so typical of the market. And I'm not here to defend Pearson, but I'm here to defend the idea of keeping a bit of cash on balance sheet. Because Lord Weinstock, God bless his soul, no, but it's true, and we've done this before, of GEC, no journalist would ever have the temerity of saying to him, well, you haven't got an efficient capital structure of your balance sheet, you need to spend more money, Lord Weinstock. He'd have booted him out the door. So do you think the market is just a little bit crazed about this efficient capital balance sheet they keep going on about, rather than actually allowing companies a little bit of leeway to see how things pan out?
I would agree with you. Because I think having optionality in what is still a relatively unstable market is really, really important. And
you've been on a journey, let's be honest about it. Pearson hasn't always been in fine fettle of where it wants to be and compared to where it is.
Well, thank you for saying that. I believe we were the second best performing stock on the FTSE last year.
Yeah, you come off a low base though, Andy.
Well, we will take anything we get.
Okay.
But I think more importantly, as a company, we're much more stable now, and we have a clear growth trajectory, and expanding beyond. I wasn't introduced as the CEO of Pearson, the educational textbook publisher. Yeah. Because there's so much more now to our company, and so as we look across the group, how we deploy our capital, I think is really, really important.